I hand over to Piergiorgio Valente to first give his presentation. So the floor is yours, Piergiorgio.
Thank you very much, Christopher. Preliminary, I would like to anticipate that establishing a simpler and effective common system for teleworking is an important priority. And it has also the potential to contribute to a competitive investment environment in the EU. Now I would like to focus on the responsibility for employers for withholding taxes from an employee's paycheck for income tax, social security, and Medicare contributions. When we talk about digital nomads, this becomes very difficult. So to a certain extent, the employers pay a portion of the taxes of the employees on behalf of the employees. So independent employees are to a certain extent independent contractors, and they are responsible for paying their own taxes. And usually they receive payments in full without tax deduction. So we need to take that into consideration. With reference to the degree of control, freedom, and discretion over the work, that's an important issue for permanent establishment as well. And then we have to take into consideration the rights and protection. An employee does have minimum wage and overtime, anti-discrimination laws, workers' compensation, unemployment benefits, and the right to form or join labor unions. So that's something we need to take into consideration. In essence, more decentralized jobs, the rise of digital nomadism, on-demand work via apps, and people working from home, and more frequently, people working in two different countries are posing a lot of problems in the interaction between social contribution, dependent workers, income, and permanent establishment. Now I would like to outline some preliminary topics. First of all, the global puzzle for teleworking. A global tax puzzle refers to the complex and interconnected challenges faced by countries in designing and implementing effective tax systems. There are some key aspects to take into consideration in the global tax puzzle. First of all, competition. Countries compete with each other to attract investment and businesses by offering competitive tax rates and incentives. But at the same time, we have to take into consideration tax coordination and tax convergence. So in the context of tax policy for teleworking, coordination and convergence are two distinct phases that countries may go through in their efforts to harmonize tax systems and promote cooperation. And balancing competition, coordination, and convergence in taxation of teleworking is really a complex task. We may find 6 relevant topics for setting the framework for teleworking. First of all is the law regulating the human behavior. Nowadays, the universality of economic relations has sparked an increasingly polarized environment, and the territoriality of the rules conflicts directly with the globalism of the relations they try to regulate. But at the same time, a critical factor in the international tax arena has to take into consideration, which is the transnational corporation. And what do we mean by transnational corporation? By transnational corporation, we mean a multinational corporation, the management of which is largely centralized at global level. Multinationals are distinguished for performing their business activities in several jurisdictions through a local presence, relatively independent in each jurisdiction. However, transnational corporations perform their activity in a totally different manner. They are a sole organism exercising a single entrepreneurial activity through various local instruments under a single leadership. This is relevant for the value creation process. If a company has functions with real people, it bears real risks and has real assets. If that's the case, there is a value to share in the group. And if there is a value, there is a transfer pricing which is driven by facts and circumstances. On the other hand, if there is no value, the transfer pricing methodology is purely tax-driven and as such is not acceptable. Another point to take into consideration is the global mobility tax planning. Global mobility tax planning refers to the strategic management of tax considerations for individuals or businesses with international operations or employees working across borders. And it involves optimizing tax structures and compliance to minimize tax liabilities and ensure at the same time tax efficiency while adhering to relevant tax laws and regulation. So, in essence, tax policy is setting the agenda of the countries, and tax policy will be and is being driven by technology. So we have to look and we have to foresee a business-friendly tax environment for teleworking. And for us as tax advisors, a tax-friendly teleworking means simple, clear-cut, flexible, and a rewarding system in terms of investment, innovation, growth, and job creation. Having said that, let's move on to the potential solutions. First of all, a preset methodology is needed. Governments and tax authorities should establish a preset methodology with clear guidelines and remote work agreements between countries to define tax obligations for employees engaged in teleworking across borders. These agreements could provide a systematic framework for determining the taxes applicable, avoiding double taxation, and ensuring a fair distribution of tax revenues between countries. Now, permanent establishment rules. The tax authorities could review and update their permanent establishment rules to account for the changing nature of the work. First of all, the business purpose. Second, a FAR analysis, functions, asset, and risk analysis. A substance test, which refers to the requirement for a company to have a substantial business activity in the country. It means that we might envisage a PE only for teleworking, a teleworking PE, possibly only for social security. And there are two concepts to take into consideration. The first is the difference between active PE and passive PE. And this refers to the income generation process. Is the active PE trading within the country with the PE, or the trading is through the PE? And that's a relevant question not only for the income generation process of the employee, but mainly for the corporation itself. The specific approach and timeline for changing PE rules will depend on the legal and regulatory frameworks of each country, as well as the willingness of jurisdictions to engage in international cooperation. So first of all, review and assessment. That's the first step to initiate changes in the PE rules. Policy developments, legislative and regulatory amendments, and international cooperation, bilateral negotiations, multilateral forums, and international organizations. Now, teleworking tax incentives. Governments could consider implementing tax incentives to encourage teleworking. For example, they could offer tax credits, deductions for expenses related to home offices, internet connections, and other teleworking equipment. At the same time, countries might offer regional development incentives. Governments may implement regional or local tax incentives to promote teleworking in specific areas, such as rural or economically disadvantaged regions. At the same time, countries might consider green initiatives by introducing tax incentives as part of their environmental sustainability initiatives. This will be a means to reduce commuting and greenhouse tax emissions. Examples might include carbon credits, tax breaks for companies with telework policies, or reduced taxes for individuals. Now we have to think about simplified taxation procedures. First of all, tax authorities, tax governments should simplify the reporting and filing procedures. And it is crucial to strike a balance between simplifying compliance and ensuring the integrity of the tax system. In this area, we might envisage some key aspects. First of all, standardized reporting. Simplified taxation procedures can include standardized reporting formats specifically designed for teleworkers. These formats can capture relevant information, such as income earned from teleworking, eligible deductions, and any applicable tax credit. Another topic, presumptive taxation. In some cases, tax authorities may consider implementing presumptive taxation for teleworkers. This approach involves estimating a taxpayer's income based on predetermined factors or benchmarks. Presumptive taxation, at the same time, can be particularly useful when it is challenging for teleworkers to maintain detailed records or when their income fluctuates significantly. Another topic to take into consideration is the pre-filled tax returns. Tax authorities can pre-fill tax returns for teleworkers with information that is readily available to them. Pre-filled tax returns reduce the burden on taxpayers, and this approach can minimize errors and simplify the filing procedure. But then the key question is how coordination can be achieved for teleworking. 4 solutions to be considered. First of all, allocation of taxing rights. For teleworking, it is important to coordinate the allocation of taxing rights to determine whether the income should be taxed in the employee's country of residence, the country where the work is performed, or a combination of both. How to do that? Allocation formula. An allocation formula would determine how income and taxes are allocated between different jurisdictions when an employee engages in teleworking across borders. But which are the factors for allocation? Various factors to determine the portion of income that should be allocated to each jurisdiction. And these factors could include the numbers of days worked in each jurisdiction, the location of the employer's headquarters, the employee's residence, and the source of revenue generated. That's the mix, and this might be the confusion between the income generation process of the employee and the income generation process of the employer. Also in the allocation formula, the weighted allocation. The formula may assign different weights based on the numbers of work days spent in a particular jurisdiction, and this might carry more weight compared to other factors. Then we have the calculation method and the avoiding of double taxation. This could be a mechanism to allocate income and taxes in a more equitable and transparent manner. Now, let's look at the de minimis perimeter for taxation. Setting a de minimis perimeter refers to establishing a threshold or limit below which activities or transactions are exempt from taxation or regulatory requirement. Threshold for taxation. A de minimis perimeter can be set to determine the minimum value or level of activity below which no tax liability arises. This will simplify the tax obligations for small businesses and reduce administrative burdens. Threshold for reporting. Governments may set a de minimis perimeter for reporting purposes, where transactions or activities below certain thresholds are not required to be reported to tax authorities. And finally, a threshold for regulatory compliance. But the de minimis perimeter might also be aligned with social security threshold. By aligning the de minimis perimeter with the social security threshold, certain low income or part-time workers can be exempted from social security contributions, reducing administrative burdens and compliance costs. One-stop shop system. A one-stop shop system developed for cross-border teleworkers may serve as a first step to having an infrastructure allowing employees and employers to reduce tax disputes between member states. This may be achieved by simplifying tax compliance and reducing tax disputes between member states. Such a system would aim to streamline tax obligations for teleworkers by centralizing the filing and payment of taxes. This will enhance tax certainty and at the same time an efficient information exchange. Now, reaching the end of my presentation, I would like to provide some consideration for an EU solution. I strongly believe that an EU solution is needed. First of all, tax treaty coordination. Harmonizing the interpretation and the application of tax treaty provisions can help preventing double taxation and facilitate tax planning for individual and business operating in the EU. This is not only a semantic issue. Clear definition of teleworking, clear definition of PE for teleworking is needed. Another topic is common transfer pricing guideline. This would enhance transparency, reduce compliance burdens, and mitigate the risks of transfer pricing disputes among member states. Mutual agreement procedures and advanced pricing agreements. That's relevant for enhancing the efficiency and the effectiveness of the instruments in order to provide a streamlined process for taxpayers to resolve cross-border tax disputes or prevent tax disputes. And finally, tax compliance assistance with harmonized social security coordination and enhanced exchange of best practices.